If you look at Bitcoin and you look at all the other cryptos, there's a crypto economy. It's got its own future. It's very complicated and murky. We could talk about it for 3 hours. There's competitive issues, security issues, regulatory issues, nation state issues, complicated. Then there's Bitcoin, a digital property on a dominant network. It doesn't need any of the other crypto whatever to be successful. For Bitcoin to be successful, there are any of 10,000 entities. The Sovereign Wealth Fund of Abu Dhabi, the Sovereign Wealth Fund of Saudi Arabia, the Qataris, the Emiratis, the Norwegian Sovereign Wealth Fund, every public investor, every macro investor, every large company on earth, any municipality, any state, any government, there's 10, 20,000 people, they go to sleep tonight, they could wake up tomorrow morning and they could say, I think Bitcoin looks like crypto gold. I'm going to go ahead and put 3% of my portfolio in it. That means I'm going to buy $4 billion of it. I'm going to buy $4 or $5 billion of it. It's nothing to me. It's nothing. It's like figure out how important 2% of your money is. It's like that deal. It's like, I noticed it. I'm going to put 2-3% of my assets into it. We'll see where it goes. LFG. And they put the news release out on the wire, and Bitcoin doubles or triples. It's the day that a Warren Buffett gets up and he says to some dude that works for him, I got 50 billion, figure out something to invest it in. And the dude says, oh, well, we bought $10 billion worth of Apple, and then Apple triples. And Warren Buffett made more money on Apple stock, which was a delegated decision by a dude. He made more money on Apple stock than he made in his entire life, and he's acknowledged to be like maybe one of the most successful investors of the last 100 years. And yet the thing he made the most money on was like an afterthought. So back to what does this mean to Bitcoin? It's like some dude with a $400 billion balance sheet can delegate to a portfolio manager to look at this thing, and that portfolio manager can say, I'm gonna put 2% into it. And if you pick up the paper and you read that the Sovereign Wealth Fund of such and such state bought $5 billion worth of it, what happens is the next 5 countries, they think they'll put $5 billion into it. And then what happens next is somebody at Google will say, I guess we can hold $5 billion of it. And then somebody at Goldman Sachs or Morgan Stanley will say, I guess we probably should grab some. And then Ray Dalio with his 50 billion or 100 billion or 150 billion dollars. Okay, well, I guess instead of like 0.5%, maybe 3%. Okay, and then all of a sudden Bitcoin spends from 40,000 to 150,000, 200,000. And I guess what I'm telling you is there's 10,000 people that could make $5 billion in 30 days if they wanted to bend over and pick up the money without taking a risk. But at the end of the day, the future is going to be determined in part by the past, and in part of it is what the crypto industry thinks and does. But a lot of it is a function of what one regulator could get up tomorrow and put out a press release that would double the market. Any politician, there's probably 200 politicians. There's 10,000 big companies. There's 10,000 big institutional investors. There's 10,000 big governmental entities. Here's the big idea. The things at a tipping point, you don't need them all to agree. You just need anybody to agree. All you need is 1, 2, 3. 1 will tip 5, will tip 25. And then you spin up by an order of magnitude. So when will that happen? I don't know. Like, is it an if? It's not an if, it's a when. It will happen, because I can't really imagine that we live in a world where 30,000 people don't want billions of dollars of money. This is a solution to a lot of problems. It's a big tech solution. If you're Apple, you can take your market cap up by $2 trillion. Okay, so does someone at Apple want to make $2 trillion? Presumably. There are certain big tech players that will remain nameless, or even exchanges. I'm like, Yeah, certain exchanges that will remain nameless, you know, you take $1 billion, you buy Bitcoin, you put it out on the wire, Bitcoin trades up, your stock trades up, right? So there are a lot of big tech companies, Apple, Google, Facebook, Amazon, Microsoft, to just name a few. They could make $100 billion to $1 trillion. Will they? Not all of them, but somebody will. You've got all the nation states. The distinction that I make, I think it's helpful, is you've got a portfolio. Let's say you have $100. What portion of it is a savings account that you want to save for 100 years? 10 years at least, a long time. That portion you want to save in strong property. In an inflationary environment, if you're going to save money for 30 years, you either got to buy land or some strong property, and Bitcoin, I think, is the strongest property. And you decide what. I mean, I respect any decision. You want to buy art, you want to buy land, you want to buy trophy assets, you want to buy something that'll hold its value for 30 or 40 years. You do that, you're a saver. It becomes pretty obvious if you live in Argentina and I told you the currency is going to lose 75% of its value in the next 12 months. If you're switching from the peso to the dollar, you're just a saver, right? You're not an investor. There's another part of your portfolio. You're an investor. Okay, you're taking risk. Like, is Apple better than Peloton? Is it better than GameStop? Is it better than ETH? Is it better than Solana? Is it better than Uber? Is a private company better than a public company? Right? Is a crypto project better than an equity finance tech project? Do you want to buy a biotech gene splicing thing? They're all just different ventures. You're taking a venture and you got an investment. Just, I think my view there is just you deserve to understand what you're investing in. If you're investing in a public company, you can read my 10K and you can see who owns it. If you're investing in a private company, maybe you can. If you're investing in a crypto project and you don't know who controls it and how many there are, right? You're at a disadvantage, right? So the friction comes from, are there fair disclosures as to the risk you're taking? I'm not here to give you trading advice. I can't time the market. I don't understand all those risks. I know there's a risk an asteroid will hit the Earth. And I know there's a black swan risk, and maybe, demons come down from hell above or heaven below or whatever, and they screw with Bitcoin. I get it. But all things considered, you're going to lose 90% of, your money over the next 24 months if you're in a hyperinflating environment by doing nothing. So my view is, if you're guaranteed to lose 90% of your assets to do nothing, then, you might as well do something. I think that people oftentimes, they don't get their risk right. There is a risk to doing nothing. And the risk to doing nothing in a monetary sense is the monetary inflation rate. So when the monetary inflation rate hits 25%, it means that there needs to be a 25% chance of Bitcoin going to zero in the next 12 months for you not to want to buy it. And when the monetary inflation rate hits, in Lebanon or Turkey or Argentina or someplace, when it hits 50 or 75 or 80 or 150%, the risk of doing nothing is far higher than the risk of doing something.